Good evening, everyone. Welcome to the official YouTube channel of Officers at 24/7. So before starting the session, first let me know is audio video both are okay. Are we good to go? So as you know, yesterday only we have started the module C, and in the module C we have discussed the first unit of module C, that was Indian financial system overview. So today we are going to talk about the second unit of your module C. In the second unit we have Indian banking structure that we are going to cover in today's session. If we talk about Indian economy, Indian financial system, we have 4 modules, 45 units are there. Out of the 45 units, only 19 units are there in the module A and B, and from 20th unit your module C starts. It means the module C and D have comparatively more syllabus in your IE IFS paper. Clear? So this is your module C, class number 2, and those candidates who are watching this session for the first time or who are actually starting preparation now for their JAIIB May 2024 paper, I would like to inform you all that we have already covered the module A and B in Achiever series. To check all those sessions, you have recording available on Officers at 24/7 YouTube channel in the playlist section. So go to the playlist section and check all the sessions recording available there for the module A. Okay, so we have started these session from your 4th of December. First we have done module A topic wise study, then we went through the advanced questions on module A, because it's very obvious by just reading the basic questions we will not be able to clear the paper. To clear the paper we have to practice the advanced questions, and that we have done for module A after completing all the 11 units basic questions. Then when it comes to the module B, first we have done the basic study of your all the topics or the basic questions we have done, and then we started with the advanced questions after that, and now we have started module C. Right now we are talking about the basic questions. When we complete all the topics with the basic question, we will be doing the advanced questions as well in the module C as okay. Okay, so this is all for this is the whole information about the series of your IE IFS, and this series going on Officers at 24/7 Monday to Saturday in the evening 7 p.m. for IE IFS. Same series is going on for PPB in the morning at 6 a.m. So to join these sessions, you just have to subscribe the channel Officers at 24/7. So let's start module number C, class number 2, unit number 21. That is Indian banking structure. That's what we are going to study today. Okay, so we are going to study the Indian banking structure. So as you know, every day, in every session, first we just discuss the topic and then we move forward to the MCQ. So let's start with the same pattern. So when it comes to the Indian banking structure, what is this actually? Indian banking structure started, or the banking structure started in India from 1770, and that's the year when the first Bank of India, or I can say the formal financial system in the country, was introduced, and that bank was Bank of Hindustan, established in 1770. This bank, later on it failed to continue its function, but yes, this was the first bank which started banking system in India, or I can say it was the first bank which have introduced the formal financial system in the country. Now when it comes to the banking system or banking structure, the history of banking starts from the 1770. Then there are certain famous banks we have, like the Presidency Bank. We used to have 3 Presidency Bank. First was Bank of Calcutta. Its name have been changed in 1809 to Bank of Bengal. So first Presidency Bank was Bank of Bengal. Second was Bank of Bombay, and the third was Bank of Madras. These 3 Presidency banks have been amalgamated and they created the Imperial Bank of India in the year 1921. And later on, this Imperial Bank of India changed into what bank? It was changed into State Bank of India in 1955. So why State Bank of India is such a huge public sector bank, or a largest public sector bank in the country? Because it have merged a lot of banks with it. First 3 Presidency Bank merged, then Imperial Bank was created, then Imperial Bank converted to SBI, then the 8 associate banks of SBI was merged in the SBI, and the Bharatiya Mahila Bank, which was established in 2013, was also merged in SBI. And apart from that, a lot of banks have been merged in the SBI, and that's how SBI got the major customer base, the deposits, the business, everything. Okay, and that's the reason why State Bank of India is known as the largest public sector bank of the country. Correct? Now, if I talk about the other banks, the other thing is important in this chapter is nationalization. So first of all, what is nationalization? Nationalization simply means when the government of India purchased 51% or more than 51% shares of any private bank or any private entity. So let's say, for example, we have a private company. The 51% share of that private company or more than 51% share of the private company have been purchased by the government of the country. This process is known as nationalization. And when we talk about nationalization in India, the commercial bank got 2 times nationalization. The first nationalization happened in 1969, where only 14 banks, the 14 major commercial banks were nationalized. Why only 14 banks were nationalized? Because at that time we only had the criteria like 50 crore minimum deposit should be there with the bank. Only those banks will be nationalized by the government or will be purchased by the government, I can say. And in the year 1969, we have such kind of banks only 14. So 14 banks were nationalized. Second nationalization happened in 1980, and the 6 major commercial bank was nationalized at that time. Why only 6? Because there was a criteria of 200 crore public deposit, and we had only 6 banks at that time who have 200 crore public deposit, and that's how total 20 banks were nationalized in the country. First time 14, second time 6. But right now, if you talk about how many nationalized banks in our country, we have only 11 nationalized banks. So where the other 9 banks goes? They have been merged with any other bank. So the first merger of nationalized bank happened in 1993 when the new Bank of India merged with Punjab National Bank. The second nationalization after 1993, the second merger of nationalized bank happened in 2019 when the Dena Bank and Vijaya Bank merged with the Bank of Baroda. And after that, the third merger of nationalized bank happened in 2020, where a lot of banks have been merged. First, the Punjab National Bank have been merged with your United Bank of India and your Oriental Bank of Commerce. Second, your Union Bank of India merged with Andhra Bank and Corporation Bank. Third, your Allahabad Bank merged with Indian Bank. Fourth, Syndicate Bank merged with Canara Bank. So these merger have been seen from 1993 to 2020, and after this merger we have only 11 nationalized banks in the country. Clear? So this is what the banking structure talks about. What are the types of banks? So first of all, when it comes to the types of bank, first we have a Central Bank of India, that is RBI. RBI divided banking system into 2 categories, that is scheduled banks and non-scheduled banks. Scheduled banks are those banks which are defined under the second schedule of RBI Act 1934, and the non-scheduled banks are those banks which are not defined under the second schedule of RBI Act. And there are 2 criteria. The first criteria the banks have to fulfill to come under the second schedule of RBI Act 1934 is first, to have minimum paid up capital of 5 lakh. And the second criteria is bank have to maintain the reserve ratio. Now, what is reserve ratio? The CRR and SLR of monetary policy. This is the criteria of scheduled bank. Okay. Now, the scheduled bank further divided into commercial bank, non-commercial bank and cooperative bank. Commercial bank further divided into public sector bank, private sector bank and foreign bank. Public sector bank further divided into SBI and nationalized bank. Then the cooperative bank further divided into primary credit society, district central cooperative bank and a state cooperative bank. If we talk about non-scheduled bank, they have local area banks, and only 2 local area banks are there in India. Apart from that, the special category banks, or I can say differentiated banks, are there, that is Payment Bank and Small Finance Bank, which introduced in 2015 by RBI for the purpose of financial inclusion. Apart from that, we also have a scheduled commercial bank, that is RRB, Regional Rural Banks. So these are the total banks which are working in India, and that creates, all these banks creates the Indian banking structure. Okay, so I guess the basic understanding I have given to all of you. Now we are going to move forward and practice certain questions on the same knowledge. So the first question you have is, in terms of which section of Banking Regulation Act that was came in 1949 is the business of banking defined? So, Acha, do remember when we are discussing question or we are practicing question, do not only focus on the question and option, also focus on the explanation I am giving. Okay, explanation is also important. Now, if we talk about here, Banking Regulation Act is introduced in 1949. Earlier it used to be known as Banking Companies Act. Okay, and what is the business of banking? Business of banking have three features, or I can say it have been defined in the three ways. The first, accept deposit from public. Second, for the purpose of what? For the purpose of what? Lending or investment. Okay, then the next one we have is the third one we have is that it will be repayable on demand and it will be withdrawable by using the right instrument like the demand draft, check, etc. Okay, so this is what the business of banking is. Business of banking says simply that banks, those institutions which accept deposit from public, use that deposit to provide loan or investment or to do investment in the market, and they are repaying that money to the customer when customer demands and make it withdrawable to the customer whenever he or she uses the instrument to withdraw their money. Okay, so this is the business of banking. It is defined under Banking Regulation Act 1949 in the section 5B. Okay, so section 5B actually talks about your business of banking. I guess this is understood. Business of banking. Achha, section 6 talks about the various forms of banking. Okay, like what are the other businesses or services banking can provide? That is defined under section 6. So the right answer for this question will be A. Section 5 talks about the business of banking. Clear? Now, next question we have, in which year Reserve Bank of India was established? So it's a very easy question, I know, and I guess everybody will be capable of answering this question. But with this, we have to cover additional information about RBI. Like first, in 1926, Hilton Young Commission, that is also known as Royal Commission on Indian Currency, recommended that we should have a central bank of the country. The second, in 1928, it was rejected because it was not fulfilling the need of the country to regulate banking system, currency system, and the monetary policy. Then apart from that, in 1930, Central Bank Investigation Committee came. And after this committee's report in 1934, RBI Act was passed. And on 1st April 1935, RBI was established. So the central bank was established on 1st April 1935. But one more thing is there. When RBI was established, it used to be known as private shareholders bank. Why RBI used to be known as private shareholder bank? Because when RBI was created or established, we needed the initial capital 5 crores and the government did not have that capital. So government had borrowed that money from the public, and people like us have purchased the share of RBI, and that's why RBI used to be private shareholders bank. Okay, so what happened? Is it RBI is still a private shareholder bank? Obviously not, it's a government's bank. And how this happened? Because of the nationalization of RBI. So the nationalization of RBI have been done in 1949. On 1st January 1949. After this nationalization, RBI became government's bank. Okay, so the right answer will be C. But apart from this option, do remember all the explanation I have given here. Now, right answer is C. Second question, or I can say the next question. What is the minimum capital requirement is there to set up the universal bank? Now, first of all, we should know what is universal bank. Universal bank is the bank in which under one roof you are getting all kinds of services. You are getting commercial services, investment services, consultancy services, everything is there. Deposit, withdrawal, lending, check clearance, demand draft, locker facility, safe custody, demat account, insurance policies, in foreign investments, everything is available under one roof. That is your universal bank. Okay, and that's your universal banking. And to start universal banking, you need 500 crores initial capital, or I can say minimum capital requirement. Okay, like SBI, PNB, Axis Bank, ICICI Bank, all these are what? They are a type of universal banking. It's because they are providing all the services under one roof. Okay, so universal bank, public sector bank, private sector bank, they need 500 crore minimum capital to start their business. So right answer is C. Okay, next question. Foreign banks have three common modes by which they can operate overseas. These are by way of dash. So foreign banks are what? These are those banks which have their headquarter in foreign country, but they have in India only their branches. So those banks whose headquarter is in foreign country, but in India they have only their branches, those banks are known as foreign banks. Clear? Now, headquarter is in foreign currency, in India they have branches. So what are the ways by which foreign banks can come to India? By branches, by subsidiaries, by representative offices. Only one, only three, both 2 and 3, or all of the above. So what are the ways by which the foreign banks can come to India? And the answer for this question will be all of the above. The answer of this question will be what? It is all of the above. In all the these are the all common modes by which foreign banks can come to India. Okay, so right answer is D. Next question. What is the minimum capital requirement for setting up the small finance bank? So when it comes to the small finance bank, it's a type of differentiated bank. The payment bank, small finance bank, they are known as differentiated bank. Differentiated banks means they have been introduced or they have been established with a certain purpose, with a certain objective. So the small finance bank, if we talk about, the minimum capital that is required here is your 200 crores. When it was introduced in 2015, it used to have initial or minimum capital requirement was 100 crore. That was same for the payment bank as well. So payment bank still have 100 crore requirement, but the small finance bank requirement have been increased from 100 crore to 200 crore. So the right answer will be B. Okay, next question. Next we have, what is the maximum balance that a payment bank can maintain in each account? The maximum balance payment bank can maintain in each account. 1 lakh, 2 lakh, 5 lakh, no limit. So payment banks are differentiated bank, introduced in 2015 only, and they can only provide CASA account, current account, savings account. RAFA is not allowed in the payment bank. And if we talk about when it was introduced in 2015, they were allowed to accept only 1 lakh deposit per customer. But this is increased by RBI. Now they are allowed to take up to 2 lakh rupees per customer. Okay, so this is the maximum limit. Not more than 2 lakh they can accept. So right answer is B. Remember, it used to be 1 lakh, but now it is 2 lakh. Next question. Match the following. So you can see one side you have the name of banks and the other side you have a name of year of establishment. Okay. So now start with the particular institution. Whenever you get the match the following question, start with the question, start from the option which you are 100% sure. Like I am 100% sure about what? About Imperial Bank of India, because Imperial Bank of India was created after amalgamating the 3 presidency bank in 1921. So I am very confirm about this. Apart from that, I am also very confirm about the first presidency bank. It was Bank of Bengal, introduced in 1806. Sorry. When it was introduced, when it was established in 1806, it used to be known as Bank of Calcutta. But in 1809, its name changed to Bank of Bengal. But yes, the year was 1806. Apart from that, I also remember Bank of Madras. Bank of Madras is actually a presidency bank, and this is what? This is the 3rd presidency bank. So it have establishment year as 1843. Now let's match. The 5th is A, the fourth is B, the third is C. Okay, so you have to match in which of the following option these matches. So let's say third is C, third is A, okay, third is C here, third is D, third is C here. It means either any B or D, out of B or D, one option will be correct. Now let's see, 4 is B, and in the B option saying 4 is D, 4 is B. It means right answer is D. Because fifth is A, fourth is B, third is C, and you can see CBA. It means the Punjab National Bank is 1894 and the Indian Bank is 1907. So the right answer will be your D option. So this is how you have to answer the match the following question. Okay, so you do not have to go with each and every. Like if, let's say for example, if I start with the first option or the first question here, that is Punjab National Bank. I know Punjab National Bank was established in 1894. Acha. One more thing, in your book, in the Macmillan book, this year have been given wrong. So do not get confused with it. In the Macmillan book, the year have been given 1874. But the right establishment year is 1894. Do not get confused. So first is E. Now you can see in the option, only D option have first is E. So now, if you have matched this, you do not have to go for further. Okay, so always make sure you use the elimination method to answer the question. Now, next question. Dash states no firm, individual or group of individuals shall, for the purpose of carrying on any business, use as part of its or his name any of words bank, banking or banking company. In which section it is defined? Section 7.2, Section 7.1, Section 6.2, Section 5. So it cannot be Section 5 because I have told you in the Section 5 we have business of banking defined. That 3 works that we have discussed in the first question. Then if we talk about Section 6 actually talks about the various forms of business. So this is not talking about various forms of business. So actually it can be option A or B, either A or B. And the right answer is option number A. It talks about your which company will be using the name banking company, banking or a banker. So right answer is Section 7.2 states which firm or individual can use these words or which cannot. Okay, so right answer is A. Next question. Filling the blanks. It is asking in relation to concept of capital requirement under small finance bank. The minimum paid up equity capital for setting up a small finance bank was originally fixed at dash crore. Was. It means in 2015 it was fixed at what amount? And I have just told you earlier it used to be 100 crore. Not 200, not 300. So right answer will be 100 crore. It used to be 100. And this increased to what? 200 crore. So the right answer will be your B. Okay, right answer we have is B. I hope clear. Next. Which of the following banks are not accorded schedule status by RBI as matter of policy? So which bank is not a part of schedule bank? And what is schedule bank? Those bank which is defined under the second schedule of RBI Act 1934. Those banks are schedule bank. So public sector are scheduled, private sector are scheduled, but the district central cooperative bank, they have not got the permission, or I can say they have not got the status of schedule bank from Reserve Bank of India. So your right answer will be the C option. Okay, what is the right answer? Right answer we have is C. Next. Okay, so this was all for today. And now let me know how many answers you guys have given correct. Also, if you have any doubt, you can ask in the comment section. Just drop your message. I will check your message there and will answer your question or your query. Okay. So apart from that, one more important information that as I have told you, the PPB has huge syllabus. That's why I'm starting the resolution batch with the PPB, not with IFS. So the PPB is starting from 13th of January. Okay, from 13th of January, I am starting this batch from 8 to 9 p.m. So from 8 to 9 p.m. we will be having your what batch? The resolution batch for PPB. Okay, in this batch, AFM already started by Niharika ma'am from 10th of January, and from tomorrow only we are starting your PPB. How to enroll? Just first of all, do download the 24/7 application. After downloading the application, you have to go to the home page and select the exam category of yours. So your exam category is what? JAIIB, CIB. So this is the home page, and here if you scroll down, you will find the exam category. Okay, then you can see right now offer is going on, and I always tell you all, whenever you see what this double validity, do not go for any individual batch. Okay, because this is the best return of your money, or the best value you are getting when it is double validity on the Mahapack. Okay, so you can see this is your resolution batch already started AFM on 10th. Tomorrow I am starting PPB. How to enroll? Just whatever batch you want to enroll, click on the product, check the offerings of the product, then click on the buy now option. If you use the code what is written here, you will maximum get 77% discount. So for more than that discount, if you want more than that discount, you have to use a code that will be Y496 and click apply. So once you click apply, you can see it is showing you 79% discount, but 1% additional discount will be available if you use the same code on the application. So 80% discount, 6 plus 6 month validity, and this is the code. And everything will be covered under the Mahapack. Okay, and the same process is available for the resolution batch. The resolution batch have validity for 4 months. Sorry, not the 4 months, 6 months validity is there in the resolution batch. And the resolution batch, the Mahapack will cover all which is in the resolution batch. But the Mahapack have additional your mini marathons, Maha marathons. All these will be addition in the Mahapack, and all the batches, the upcoming batches, revision batches or case study batches, all will be available in the Mahapack. Okay, so accordingly decide what particular batch you want to enroll, and if you haven't started proper preparation, start it soon because paper is coming tough. Okay, and that's why we have to prepare ourselves more better. So this is all, and if you want to join the YouTube sessions on the regular basis, for that you have to subscribe the channel Officer Study 24/7 and press the bell icon so that all the upcoming sessions notification will be given to you properly. Okay, and this is all for today. Clear? And for PPB, you have to join the sessions in the morning at 6 AM. If you have doubt, you can ask in the comment section as I have told you. So thank you all for joining the session and have a great time. See you all tomorrow in the morning at 6 AM.